Now speaking, John Doyle, President and Chief Executive Officer. Marsh McLennan reported excellent second quarter results, with 11% underlying revenue growth, 17% adjusted operating income growth, and 16% adjusted EPS growth. The company raised its quarterly dividend by 20% to 71 cents and completed $300 million of share repurchases during the quarter. Despite the uncertain macroeconomic and geopolitical environment, Marsh McLennan is well positioned to perform across economic cycles and is continuing to make meaningful investments in market-facing talent and improving sales operations and client engagement. The company is also deliberately shifting its business mix to faster growth areas. Marsh McLennan is partnering with the Ukrainian government and insurers to create a data platform for the assessment of war risks, and Oliver Wyman is partnering with the Ukrainian government to develop a post-war transformation strategy. The company has appointed new leaders for Marsh McLennan International and US and Canada, as well as region and country leaders, to drive client impact through enhanced collaboration. Marsh McLennan is also taking actions to realign its workforce and skill sets with evolving needs, rationalize technology, and reduce its real estate footprint. For the full year, Marsh McLennan expects high single-digit underlying revenue growth and margin expansion, as well as strong growth in adjusted EPS. Now speaking, Mark McGivney, Chief Financial Officer. Thank you. Our second quarter results were outstanding, with mid-teens adjusted EPS growth, solid margin expansion, and underlying revenue growth of 11%. Operating income was $1.5 billion, and adjusted operating income was also $1.5 billion, up 17%. Our adjusted operating margin increased 100 basis points to 27.7%. For the first 6 months of 2023, underlying revenue growth was 10%, our adjusted operating income grew 15% to $3.3 billion, our adjusted operating margin increased 130 basis points, and our adjusted EPS increased 13% to $4.74. Risk and insurance services saw 12% revenue growth, with underlying growth of 13%. This marks the 9th consecutive quarter of 8% or higher underlying growth in REIS. Operating income increased 20% to $1.2 billion, and adjusted operating margin expanded 140 basis points to 34.2%. Marsh's revenue was $3 billion, up 9% from a year ago or 10% on an underlying basis. Growth in the second quarter reflected strong new business and excellent retention. Guy Carpenter's revenue was $576 million in the quarter, up 10% or 11% on an underlying basis. Consulting segment revenue was $2.2 billion, up 4% from a year ago or 8% on an underlying basis. Adjusted operating income increased 9% to $403 million. Mercer's revenue was $1.4 billion in the quarter, up 6% on an underlying basis, representing the 9th consecutive quarter of 5% or higher underlying growth in Mercer. Oliver Wyman's revenue in the quarter was $798 million, an increase of 11% on an underlying basis. We reported $65 million of total restructuring costs in the quarter, and we expect total charges under this program to be $375 million to $400 million. We expect to achieve total savings of roughly $300 million by 2024 and now expect to realize approximately $200 million in 2023. Our other net benefit credit was $60 million in the quarter. Investment income was $3 million in the second quarter on a GAAP basis and $2 million on an adjusted basis. Interest expense in the second quarter was $146 million, up from $114 million in the second quarter of 2022. Our effective adjusted tax rate in the second quarter was 24.2%. We ended the quarter with total debt of $12.6 billion. We raised our quarterly dividend by 20%, marking our 14th consecutive year of dividend growth. We now expect high single-digit underlying revenue growth for the full year, margin expansion for the full year, and strong growth in adjusted EPS. Wells Fargo Securities analyst Elyse Greenspan inquired, "What factors are driving your updated organic growth guidance for the full year to high single digits? What is your assumption for fiduciary investment income in the back half of the year?" John Doyle replied, "Good morning, Elyse. I'm pleased to report that our growth year to date has been strong, and the macro environment remains supportive. We've been shifting our mix of business to better growth markets, investing in talent, sales operations, and client engagement. We've also sold some non-core businesses, including one recently announced. Our outlook is positive and we've upped our guidance to high single digits. We're executing well in the marketplace and expect a good second half of growth. Fiduciary income has seen meaningful growth in the second quarter and we expect that to continue in the second half." Wells Fargo Securities analyst Elyse Greenspan inquired, "What is the expected margin improvement in Q3 and Q4, and how will the $200 million expense savings be spread throughout the year?" John Doyle replied, "I'm pleased with the margin improvement in the quarter and year to date, 100 basis points in the second quarter and 130 basis points year to date. We strive to grow revenue more than expense over time, and our growth in both top and bottom line shows that we're getting the balance right. We did guide to less improvement in the second quarter, but I'm still quite pleased with where we are. We expect solid margin expansion again for the 16th year. Mark can provide more details on the restructuring program. Mark McGivney replied, "We've updated our outlook for this year to $200 million, while keeping the overall at $300 million. This reflects our successful execution and the fact that we've achieved our savings goals faster than anticipated. We suggested last quarter that it would be reasonable to assume the savings would be spread evenly throughout the year, and I would suggest the same. So, it's likely that the increase will be spread out over the course of the year, rather than all coming in the back half." John Doyle replied, "We anticipate a more favorable expense outlook in the second half of the year. We expect to see a decrease in expenses compared." J.P. Morgan Chase & Company analyst Jimmy Bhullar inquired, "What has been the impact of the hiring activity on Reese business revenues over the past couple of years?" John Doyle replied, "Yes, Jimmy. We're very pleased with our growth, which was driven by strategic hiring and investments. We made smart inorganic investments and were very selective with our lateral hires. We've seen great returns from these investments, both financially and culturally. Our new hires have not only helped us grow, but have also made us better." J.P. Morgan Chase & Company analyst Jimmy Bhullar inquired, "What macroeconomic factors are creating headwinds for the company and how does inflation affect the company's earnings?" John Doyle replied, "Good question, Jimmy. The economy has been resilient, but inflation remains persistent. We're beginning to see it come down in the U.S., but not to the level the central bank is targeting. This has an impact on markets here and abroad, and there is still a meaningful risk of recession. Nominal GDP is a better indicator of demand for us than real GDP, and inflation is beneficial to the company, although we have some headwinds in our investment business from a growth perspective. Equity markets have improved year over year, and we're pleased with the improving growth profile year to date in Mercer Investments." BMO Capital Markets analyst Michael Zareski inquired, "Can you provide any insight into whether the organic growth was driven by market share gains or overall market conditions?" John Doyle replied, "Mike, it's a mix of impacts that make it difficult to say with precision. Inflation has come down in the U.S., GDP growth has slowed, and P&C pricing moderated in the quarter. However, tight labor markets remain a positive factor. Compared to the 2010 to 2020 decade, we have more tailwinds than headwinds. We've been working aggressively to shift our mix and improve our growth profile, not just be a passive index on GDP or P&C pricing. We're pleased with the first half of the year and our outlook for revenue growth in the second half, but there is still macro risk to consider." BMO Capital Markets analyst Michael Zareski inquired, "Do you expect free cash flow to grow faster than earnings this year?" Mark McGivney replied, "Thanks, Mike. We don't focus too much on free cash flow growth in any quarter or year, as it can be volatile. In Q2, free cash flow was up significantly, but there was a low base issue to consider. Over the last decade, we've had a great run of double-digit free cash flow growth that has tracked closely to our double-digit earnings growth. We're confident in our outlook for continued strong earnings growth, and we expect our free cash flow growth to follow suit." Goldman Sachs analyst Robert Cox inquired, "What growth opportunities are you most excited about in the Marsh business domestically and internationally over the next year and 5 years?" John Doyle replied, "We are performing well and have the best talent in the market, which has enabled us to capture market share. Martin, can you provide an overview of our growth this year and what we can expect for the remainder of the year?" Martin South replied, "Sure, John. We had a great 10% organic growth in Q2, which is on top of 9% in Q2 22. Our full-year growth was 8%. International was 10%, Latin America 17%, EMEA 11%, APAC 6%, and US and Canada 9%. We saw strong growth across all geographies, with specialties such as credit, construction, aviation, energy, and power performing particularly well. Our advisory business and MMB also saw double-digit growth, as did our renewal business. It was a nice mix of new and renewal business." Goldman Sachs analyst Robert Cox inquired, "Do you see the pipeline reflecting recent positive economic data points and is growth in the back half looking promising?" Nick Studer replied, "Thank you, Robert. We saw strong growth in sales in the second quarter, particularly in our public sector, banking, transportation and services, NERA, Lippincott, and digital practices. This is likely due to clients needing to use our services for performance transformation and growth strategy. We remain optimistic in the near term, but the economic outcomes in the longer term are still uncertain." Evercore IC analyst David Motemaden inquired, "What factors have contributed to the increased outlook of high single-digit growth for the year?" John Doyle replied, "Thanks, David, for the question. We've had a great start to the year, with broad-based growth across our business. Our team has worked hard to create value for our clients, and we remain positive about the outlook. We are mindful of the geopolitical and macroeconomic volatility, but we are confident in our performance for the second half of the year. Evercore IC analyst David Motemaden inquired, what factors are impacting Mercer Careers' growth rate compared to the first quarter? Martine Ferland replied, thanks, David. Our Q2 growth of 6% was impacted by delays in certain projects, but the fundamentals of the business remain strong. We have seen 9% growth year to date and demand for our services remains high. Clients are still dealing with labor shortages, wage inflation, and new technologies in the workplace. We have seen positive sentiment from our clients and our sales pipelines remain strong, giving us good visibility into the rest of the year. We are confident that the rest of the year will be good for our business. Citi analyst Mike Ward inquired, can you discuss the trends and impacts of global specialty and Guy Carpenter? Dean Clisura replied, we are pleased to report 11% underlying growth in the quarter and 10% for the first half of the year. Our global specialty team has performed impressively despite market conditions, with new business across Guy Carpenter accelerating. Our analytics platform is in high demand, and clients are seeking our advice and solutions due to the flight to quality. Guy Carpenter Securities is differentiating in the marketplace, having completed over 20 capped-on deals in the first half of the year and structuring ILS capital for key clients. The market continues to be a tailwind, though there is not enough new capital to change the pricing environment. Martin South replied, we've seen strong growth in our specialty areas, particularly in credit, construction, aviation, energy and power. Our advisory business is also doing well, helping clients manage their loss costs and drive growth during the energy transition. All of these specialty areas are seeing strong growth and momentum, which is how we differentiate ourselves in the market. John Doyle replied, in the quarter, we saw a continued increase in the cost of risk, particularly in the reinsurance market. We responded to this by launching 2 new initiatives, Fast Track and a reciprocal inside of our MGA operations at Victor. These initiatives are designed to provide our clients with new solutions to the difficult market conditions. Citi analyst Mike Ward inquired, can you provide some examples of the countercyclical products you discussed last quarter in Oliver Wyman? Nick Studer replied, our various sectors have been carefully positioned to be less exposed to the cycles. Last year, we acquired the Avascent business, which specializes in space and defense. We also do a lot of work in performance transformation, which is needed when clients are facing margin squeeze. We also have a nascent restructuring practice that has seen strong growth. The pandemic has reduced the correlation between our different industries, with some in downturn, some needing advisory support, and some being procyclical. Our private equity and private capital practice has started to pick up, with activity both pre- and post-deal. UBS analyst Weston Bloomer inquired, what impact did the banking turmoil earlier this year have on Oliver Wyman's financial services and banking growth? John Doyle replied, thanks, Weston. Nick, banking has been a strength for us to date, and we anticipate that trend to continue. We are confident that our banking services will remain a key driver of our success in the coming quarters. Nick Studer replied, our banking practice has driven 35 to 40% of our growth in the second quarter. We saw some work coming through from it, likely due to banks preparing for the new interest rate environment and the need for new tech and AI capabilities. We expect this trend to continue in the coming quarters. UBS analyst Weston Bloomer inquired, can you confirm that financial services is the largest subsector within OY? Nick Studer replied, we have a strong presence in the management consulting sector, particularly in the area of practice. It's one of our largest and most successful sectors. UBS analyst Weston Bloomer inquired, what opportunities are you seeing in the FAC placements within Guy Carpenter, and how is buyer behavior impacting growth? John Doyle replied, thanks, Weston. We've seen strong growth in FAC over the last couple of years, both seeded and client-driven. Guy Carpenter and Marsh have worked together to bring capital from around the world to our clients, helping them navigate a difficult marketplace. This has resulted in strong growth in both FAC and treaty. Piper Sandler analyst Paul Newsome inquired, what are your thoughts on the current M&A environment and how it may affect your business? John Doyle replied, yes, Paul. We remain active in the market and have a solid pipeline of potential acquisitions. We are looking for businesses with strong growth fundamentals, good leadership, and talented teams. We recently completed the Mercer Investments acquisition in Australia and are excited about the potential it brings. The number of deals is down, but strategic buyers are still active. Demand is strong for higher quality businesses, and prized assets are still trading at a premium. We have built a strong reputation as a buyer in the market, which creates a lot of opportunity for us. Do you have a follow-up, Paul? Piper Sandler analyst Paul Newsome inquired, could you discuss the impact of divestitures on margin improvements over the last quarter or year? John Doyle replied, yes, Paul. We recently announced the divestiture of an administrative business that was not core to our operations. This business was lower growth and capital intensive, and we believe that other owners can bring greater scale, technology, and solutions to it. We don't anticipate doing a lot of this type of divestiture, but when it makes us better and stronger, and enables us to invest in our core, we will take the necessary steps. Keefe, Bruyette & Woods analyst Jing Li inquired, what can you tell us about the performance of the Asia-Pacific business this quarter and what do you anticipate for the coming quarters? John Doyle replied, we're very excited about the potential for growth in Asia and the Pacific. Our recent visit to Australia has given us a lot of insight into the opportunities that exist in the region. Martin, please provide an overview of our performance in the quarter and your outlook for the future? Martin South replied, when it comes to international growth, we're pleased with the 6% underlying growth in the APAC region in the quarter and 8% year to date. We believe this is a more accurate representation of our growth over the long term. We may have seen slightly higher growth in Latin America, but we expect that to normalize over time. We have a strong business in Asia-Pac and are confident in our future prospects. John Doyle replied, there are numerous opportunities in this region due to the existing protection gap. Keefe, Bruyette & Woods analyst Jing Li inquired, can you provide an outlook on the company's expected growth rate for the next quarter? John Doyle replied, yes, we are confident in our position in the Asia-Pacific region. We have strong distribution in most major countries and the acquisition of JLT has made us even stronger. We are optimistic about the potential for growth in this region, though we are not providing specific guidance on underlying revenue growth. Goldman Sachs analyst Robert Cox inquired, can you provide an update on the impact of M&A, SPAC, and capital markets activity on this quarter's performance compared to the first quarter? John Doyle replied, Martine, sure thing. Our growth at Mercer Investments has been impressive. We've seen a steady increase in assets. Martine Ferland replied, yes, our OCO business has seen rapid growth in recent years, but it has been affected by capital markets volatility. We saw a small drag in Q2, but the outlook for the rest of the year is positive. We anticipate small accretive growth from capital markets in Q3. This is a great business for us, as it provides a diversified portfolio and clients are seeking advice to manage the volatility in the equity and bond markets. We are seeing our clients find new ways to navigate the environment. John Doyle replied, thank you all for joining us on the call this morning. I want to express my appreciation to our over 85,000 colleagues for their hard work and dedication, and to our clients for their continued support. We look forward to speaking with you next quarter.